What they don't see is how much you're paying in taxes on that profit, how much of that is going to pay down debt. They don't necessarily see the risk that you are taking as the business owner or the investment that you have made into the practice. They don't necessarily see the growth plan and how much money that is going to take. They don't see the years that you spent scraping by and hardly making anything, right? They don't see that you have a personal guarantee on any debt that is in the business. So there's a lot of context that they don't necessarily have. You didn't start your practice to barely hang on. I'll guess you started it for freedom, impact, and profit. This is Therapy for Your Money. I'm your host, Julie Harris. I'm an accountant, author of Profit First for Therapists, and CEO of GreenOak Accounting. Over the years, my team and I have partnered with hundreds of private practice owners, whether they're just getting started, scaling into thriving groups, or even preparing to sell. We've seen it all, and we know exactly what makes a practice tick financially. On Therapy for Your Money, I'll help you build a business that truly works for you. You'll get quick, actionable tips and episodes so that you can grow a profitable practice, increase your financial confidence, and pay yourself unapologetically. Because your work is way too important for you to burn out or go broke doing it. Love the podcast? Make sure to follow and give us a 5-star review. Here is Therapy for Your Money. Hello and welcome to Therapy for Your Money. Today we're talking about what I suspect might end up being a controversial topic, and that is, when is it appropriate to share financial information with your team? There are a lot of different schools of thought here, and some of you may not agree with me, but I'm going to share my experience with that and the experience that we've seen my team and I working with our clients. This episode idea actually came from my team, who was working with a client whose admin was significantly overpaid. They were just making way more than market rate. But the admin was also invited to the financial meetings. And so they were meeting with my team, with the owner, and kind of seeing everything and the kitchen sink. And this admin, even though they were consistently overpaid, kept coming back to the table and asking for more money. And so that's where the idea came for, like, who should and who should not see the financials. That is ultimately what we're talking about today. And this is not just an episode about don't show your financials to everyone, right? I'm going to give you some situations where, like, this does make sense, when it doesn't make sense, what you can do instead as well. So first of all, when you are the business owner, the buck ends with you. You are ultimately responsible for everything that happens in the practice, financial and otherwise. Sometimes I've seen situations where financial information is shared a little bit too casually. That is information that is deeply personal about the business, and there is a time and a place to share that. Often it is shared from a place of trust, right? Of wanting to maybe create trust by sharing that information. Sometimes it comes from a place of overwhelm, of not really knowing what comes next or what to do next. Sometimes it comes from a place of loneliness when you are leading a team and there's no one who really understands kind of the financial stress that you are under. And sometimes it comes from a place of wanting to be transparent and thinking that just transparency and sharing everything with the team is the way to go. But it can sometimes create problems that are hard to unwind. Because information, right, that financial information is influence. And once you share that financial information, you cannot rewind it. Someone cannot unknow the things that you have shared with them. So that's ultimately what I want to talk about today. When is it appropriate and when is it not? And this is really not about not trusting your team or hiding your numbers. It's not about fear in any way. It's about protecting your profit from unnecessary pressure. It's about you remaining or keeping clarity in compensation conversations, right? You having all of the information and deciding what needs to get shared and not. It's also about maintaining a healthy hierarchy and reducing a lot of the emotional dynamics around money. When someone has too much information, there can be some challenging situations where they do some things with that information that are maybe at the detriment of a practice, like talking behind the practice owner's back, telling clinicians that the practice owner is getting rich off of them. And If you've been in practice for, more than 10 minutes, that's really not the case, right? You're not taking advantage of anyone, I'm certain. You are trying to do right by your people, trying to do right by your clients, and also manage that financial risk as well. And so that knowledge can spiral really, really quickly sometimes. If you're someone who tends to process out loud, you want to talk things out, I can see how tempting it would be to have a conversation with maybe a trusted admin or a clinician in your practice, and you think it's kind of innocent, but that can create a difficult situation. Maybe you're someone who values vulnerability, right? And you're using that vulnerability to create trust. Or maybe you're seeking connection when you are stressed out. But if you are sharing financial information, it should have a purpose and it should have a boundary, and it usually needs to be done in a structured way. I recommend, if you are going to share financial information, that you plan ahead of time how much you are going to share and in what capacity you're going to share and what the purpose is going to be as well. If it's just sharing to share, that often is not going to be helpful. When you are planning this out in advance, then you can add a lot of context, right? Because if someone just sees profit if you're showing them the profit and loss, and you're showing them profit, what they don't see is how much you're paying in taxes on that profit, how much of that is going to pay down debt. They don't necessarily see the risk that you are taking as the business owner or the investment that you have made into the practice. They don't necessarily see the growth plan and how much money that is going to take. They don't see the years that you spent scraping by and hardly making anything, right? They don't see that you have a personal guarantee on any debt that is in the business. So there's a lot of context that they don't necessarily have. They don't see the 10-year lease that you are responsible for, right? All of those things are things that they don't necessarily see when they just see a dollar amount at the bottom of the profit and loss. All they see is, oh, there's money left over. And so when that's all the context that they have, humans tend to just fill in the blanks for themselves, right? They're going to make up a story in their minds, and that story might be, oh, well, look at them. Look at all that money that they're taking home, right? But as the owner, you're responsible for a lot of that context. And so you can and should be really intentional with who you're going to share that information with, because you're ultimately responsible for protecting the practice. That is your ultimate responsibility. You have to make sure that the practice is going to be okay. And so being strategic with who gets information is going to be really, really important. So have that purpose, have that structure, and have that boundary. What I often see is a practice owner sharing information with someone who's maybe been with them for a long time, right? So it feels loyal, they feel safe, feels like they're invested, but that doesn't automatically make that person, they're not an owner, right? They're not necessarily a strategic partner. They don't necessarily have the context of a business owner to be able to have those strategic discussions with you. So if you are sharing those high-level financial conversations with someone who maybe should not be in on them, that's sometimes a sign that you are just generally feeling alone in this, and that you might really benefit from something like peer group, a mastermind, a business coach, a CFO, a trusted accountant, because you do need an outlet to have those conversations. And obviously, because that's what we do at GreenOak Accounting, we have a lot of those conversations with owners who are saying, like, I am worried. Let's talk through this plan. I'm not sure if there's going to be enough money for the plans I have this year, or I don't know why we're on this downturn, right? So those conversations are better had with someone who has the context of your whole business, right? An accountant, a CFO, a coach, a mastermind group. They might know a lot of the history of your practice. You can share a lot of really detailed information with them without putting the business at risk, because they ultimately have no stake in the business, right? They're not being paid by the business. They are not the ones who are having to make those tough decisions. And so they can be impartial, whereas someone who's on your team is not always impartial. That's just the reality of it. They have a personal stake in making more money, right? Or in participating in the profit. And so I just caution you to be really careful when you are sharing information with your employees. As an example, I want to get a little vulnerable myself here. So we have a team of just under 40 people at GreenOak. There are 2 people on my team who see the full profit and loss. That's it. There's only 2 people out of that 40. Other people will see information based on what they are responsible for. So as we go kind of down the org chart, the information gets smaller and smaller, the amount of information that is shared. That doesn't mean that no one has no information at all. It just means that there's the most information at the top of the hierarchy and there's the least amount of information at the bottom. It's not about secrecy. It's just about everyone has the information that they need to have for their position. So let me give you some examples that are going to maybe be directly related to what you do. A clinical director who is responsible for a location should see that location's revenue, right? That is a normal thing. If they are ultimately responsible for the number of sessions, for the number of clinicians, for using that space efficiently, they probably should see at least the slice of the profit and loss that is for that specific location. Yeah, that makes a lot of sense. But that doesn't mean if you have 5 locations that they're seeing everything. They might just be seeing that one little slice. A billing manager, it is normal that they will see collections and what has been billed, right? So they might have a lot of information about income. They might not have information about expenses or about the profit of the practice. If you have someone who is in operations, maybe they are front desk, and maybe they're responsible for making sure that payments go out to vendors, or they're responsible for a budget for office supplies. Maybe they just see the operating expenses for that one specific location. And you can do that by giving them view-only access to a specific bank account, right? So you can have a bank account for just those items that you put money in on a regular basis, maybe using the profit first method, and they can see all the activity there, right? So they have a sense of how much money do I have left? What is available to me? They have that information available. You might have a credit card for someone who is responsible for a specific set of expenses where they can see all the activity on that credit card. They might know what their budget is, but they don't necessarily see the full picture. So you can give many different slices of information without giving the entire information away. Also, if there's someone on your team who is responsible for a specific KPI, they should have access to the information they need to track that KPI, right? Or else it's not going to be very effective. If they don't have full access to report that back, that is not necessarily going to be helpful. But definitely not everyone needs to see profit. Not everyone needs to see income, top line, all the gross income coming into the practice. So their access should match the level of accountability that they have. Another example would be a clinician should have access to their session data, right? Usually they're going to have access to that in your EHR or your EMR. But if you're expecting them to do a certain number of sessions per week, it's normal that they should be able to track that on their own and track that easily, right? That's a great example of having the right level of access. So I want to give you something actionable today. If you are thinking about sharing financial data, I want you to think of one of these questions or all of these questions when deciding like what is the level of access that you're going to give them. So first, think about what is the specific decisions that this person is responsible for that has a relationship to money. What KPI do they own, right? Those are going to give you information on what you should give them. What behavior am I trying to influence here? Am I trying to get them to spend less, to spend more, right? What is the thing that we're trying to encourage? Could this information create either entitlement or confusion? If so, you might want to share less. And then last but not least, am I sharing this information strategically or because I'm overwhelmed and lonely? But if there is no clear purpose, I want you to pause, sleep on it, give it a couple of days, and wait before you share that information. Because again, you just cannot unshare it once it has been done. If someone knows the information, they can't magically unknow it. As you have probably figured out, I am not a fan of open book financials. Some business owners believe strongly in that and believe in that transparency. I just don't think it serves most practices. It's not because your team is not trustworthy, but there's a lot of heaviness that comes with having all of that information. Not everyone carries risk in your practice, and I just don't think it's necessary for everyone to have access to it. When you have those boundaries, when there's a clear reason for access to information, that means that when you're going into compensation conversations with your team, they are not bringing up like, oh, well, you made X amount of dollars last month, so I feel like I should get a raise, right? When they're not necessarily meeting their clinical expectations. It helps you protect profit. Profit margins can erode very, very easily in a practice, and I want you to protect that at all costs. It helps you be a stronger leader. Yes, it is a big burden to carry on your own. It absolutely is. But it can make you a better leader. It also can make your team more stable and stronger, and it's less reactive, right? Because you're not having to manage everyone else's emotions around the money side of the practice. So if you are going to share financial information for your team, there should be a purpose. Decide in advance what and how much you're going to share and what context you're going to share, and decide where that boundary is to make sure that you ultimately protect your practice. That's all for today. See you next time. That's it for today's episode of Therapy for Your Money. Catch us on Instagram and Facebook at Therapy for Your Money Podcast, and don't forget to subscribe to GreenOak Accounting on YouTube. Until next time.
The information contained in this podcast represents the host and guest's general opinions and should not be construed as personalized accounting and tax advice. Listeners should consider all facts and circumstances before applying this information and seek appropriate advice from an accountant, financial planner, lawyer, or other professional. Any info provided does not constitute accounting, tax, or legal advice.